Good morning, everybody. It's Monday, June 5th, 5:30 a.m. Central Time. July corn futures down 2.5 at 606.5. December corn up 2.5 at 543 and 3/4. July soybeans down 2.5 at 1350. November soybeans unchanged at 1183 and 3/4. July Chicago wheat up 2.25 at 621 and a quarter. July Kansas City wheat up 5 at 817 and a quarter. July spring wheat up 4 3/4 at 812 and a half. Mackenzie, why don't we start off with the weather this morning? Hot topic as always this time of year.
Of course. The U.S. Corn Belt will stay mostly dry for another 7 days. Some modest rains may return to parts of Iowa, Missouri, and the plains this week, but still the vast majority of U.S. corn areas will stay on the dry side. Extended weather models continue to indicate that rain will return to the Corn Belt around June 14th. Extended forecasts also include a shift to below normal temperatures. This potential rain event at mid-month is a big factor in regard to corn and soybean price action.
Yep, this is the deal. When it comes to prices and price action, we're kind of in the midst of some sort of crop scare event right now. And as it was last week, the forecast coming in to start the week is not changed very much at all. The general idea here is that, yeah, we're going to be mostly dry for another 7 to 10 days. No big sweeping event. There was some rain over the weekend. A lot of, say, parts of Kansas, Nebraska, Oklahoma, into Texas saw some material rains over the weekend. And then there was some spotty stuff throughout the Corn Belt, but not any big sweeping system. But I think the market right now, corn prices in particular, are probably riding on whether or not this system comes in June 14th and after. And now you're talking 10 days out. That stuff is not necessarily super reliable. This GFS, it's updated 4 times a day. It flip-flops almost every single time. So I think that's kind of what we're riding on right now. I mean, aside from a bullish weather situation or a situation in which corn yields are decreased by a material amount, if you're a bull in the corn market, I don't know that you have much else to hang your hat on. There's not really much here in terms of demand. Exports are bad. Ethanol production's not where it needs to be. There's some questions regarding feed demand. We're still overpriced on the export market. So, yeah, weather is going to be the deal, and specifically this rain event that may or may not occur around June 14th.
So if you guys are not already subscribed to our premium content, you sure need to do so. Joe, tell me about what we've been putting out recently.
Every Sunday in June and through most of July, we do a pre-open weather update. It comes out at about 6 p.m. Central before the markets open. This is a very quick, like 4 or 5 minute video where I run through Friday's forecast versus the Sunday forecast. Was there a big shift in the models or was there not? And if so, what does it mean for price action? We know that these weekend forecasts are a big deal this time of year, so we do put these videos out on Sundays every single week during June and July. And then last week also, Chris Barron from AgView Solutions was on with me, and we talked about 2024 corn and soybean budgets. There's actually some good news here in terms of production costs, and Chris made a free tool available to you guys, to the premium subscribers, for anybody who wanted to try to punch in their production costs and compare year over year. If you guys want to see the premium stuff, go to www.standardgrain.com. You can sign up this morning with your credit card. It takes about 1 minute on your phone or computer. We'll send you all the recent videos over, and you can jump on the text message list, all of that stuff. So check that out this morning, guys.
Large money managers have reduced their net short position in the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending May 20th, the funds were net buyers of 51,000 contracts of corn. They were also net buyers of 2,000 contracts of soybeans. The funds were net sellers of 6,000 contracts of SRW wheat for the week.
In all likelihood, you saw some fund buying after the reporting period late last week. So as of Friday's close, this net short position in the corn market, they're probably still net short corn, but it may only be 35 or 40,000 contracts. Funds are probably net long, closer to 10,000 contracts of soybeans real time, and probably still net short 120,000 contracts of SRW wheat in real time. So the positions have changed a little bit. But again, the big take home here is that, there was a time not that long ago where the funds were very heavily long row crops. And now you're just kind of a mixed bag here and a big short in SRW wheat. So the sentiment among large money managers, even with this weather stuff we've got going on, it's really shifted in the other direction.
U.S. corn export sales continue to struggle. Net corn sales of 186,700 metric tons for the current marketing year were down noticeably from the previous week and from the prior 4-week average. Accumulated corn sales for the current marketing year are down 36% compared to the same period last year. Net soybean sales of 123,400 metric tons for the current marketing year were up 7% from the previous week and 16% from the prior 4-week average. Wheat net sales reductions of 210,500 metric tons for the current marketing year, which is a marketing year low, were up noticeably from the previous week, but down noticeably from the prior 4-week average.
Okay, so nothing good to speak of here. As I mentioned earlier, U.S. corn's overpriced on the export market. U.S. soybeans are overpriced on the export market. There's really just, I don't have anything nice to say about demand for anything. The only bright spot would be soybean crush. Your soybean crush continues to set records in some of the recent months, and you're going to continue to see that as we expand crush capacity in the United States. But on the export front, we're not doing anything that looks real friendly at all, and this is kind of a bearish headwind. And I know that given price action the last several days, and in row crops especially, you wouldn't notice that necessarily. But again, that's a weather deal. The demand stuff is still very much a big time problem, I think.
A strong employment report, a strong employment report and the Senate passing the debt ceiling bill caused stocks to jump on Friday. The Dow Jones saw its biggest daily gain in points since the end of November. The S&P 500 ended just below the point at which it needs to reach to exit its bear market. The employment report showed the U.S. economy added 339,000 jobs in May, surpassing Wall Street's expectation of 190,000. The report also showed that the unemployment rate rose by 3.7%, leading many investors to believe the Fed may hold off on raising interest rates this month.
Yeah, I'm still looking for the recession, and I don't see it. Here's your S&P 500 chart. I've got my wall of worry here again. So it's acted really well since it bottomed out here this low. If you guys are watching, this was, I believe, October of last year. And we peaked, I think it was August of last year, at about 4,300 in the S&P. That could be a big level to watch if you're watching the stock market at all. But this thing has outperformed a lot of expectations. The S&P is up 11.5% year to date. The S&P is a much better indicator of the stock market, guys. The Dow's only 30 stocks. I know everybody likes to watch the Dow and the point changes, but the S&P is the bigger deal to pay attention to. In regard to the Fed, there is now a 78% chance of no hike on June 14th, so that's an additional positive for the equity market, certainly.
Saudi Arabia announced it will cut 1 million barrels of oil per day in July on top of a broader OPEC Plus deal to limit supply until the end of 2024. The decision was made during a contentious OPEC Plus production meeting in Vienna over the weekend. The cut will drop Saudi Arabia's output back to 9 million barrels per day, the biggest reduction in years. In the short term, the cut may help boost oil prices, but analysts expect prices to continue to trend lower due to a declining global economy. Brent crude is down about 20% since OPEC Plus first announced a major cut of 2 million barrels per day back in October.
So WTI futures are $1.30 higher this morning, and they were substantially higher than that even at one point last night. So these higher crude prices just in the last couple of days, that's a positive for just the commodity complex in general. If you get crude to fall to like $40, that's not a good thing for the corn market, the soybean market, whatever. So I'd say that overall, the crude thing, higher crude trade paired with the strong stock market, if anything, that's it's a positive thing for the grain markets. It's not going to be a make or break deal, but it's certainly helpful. Cattle had a hell of a week last week.
Yeah, they sure did, to say it lightly. Feeder cattle futures closed an average of $8.32 higher last week. Live cattle futures closed an average of $6.12 higher. Fat cattle in the north traded between $185 and $188. That was up $3 to $5 higher on the week. In the south, fat cattle traded from $175 to $180. That was $4 to $9 higher than the previous week. Box beef had a pretty darn good day on Friday. Choice box beef was up $3.49, ending the day at $309.93, and select was up $4.61, ending Friday at $290.93.
So people in the cattle business are selling cash cattle at the highest prices that they've ever seen in their lives, right?
Yeah, it's pretty darn good. And that's one more point I wanted to make. Through Thursday, the 5 area direct weighted average Fed steer price was $3.64 higher week over week, landing at 181.35. This is the third highest average weekly reading on record. So we're reaching points, we haven't seen since 2013, 2014 when we saw those record prices.
Crazy stuff. Outside markets this morning, guys. U.S. dollars up a little bit. Stock markets mixed to higher. Bonds are off a little bit. Gold's down $10. Crude oil up $1.34 at 73.08 in the July WTI, and that's about $2 off the overnight highs. Everybody have a great day today. We'll talk to you on Tuesday.